Good morning, everyone. Let's start with last night's action on Wall Street. The three major indices closed essentially flat, with the Nasdaq at 26,348, the S&P 500 at 7,710, and the Dow at 53,885. But the real directional signal came from pre-market futures. Nasdaq futures were up 0.7%, with S&P and Dow futures also moving higher. That points to a likely continuation to the upside when U.S. markets open tonight. On individual names, Nvidia came in at $219, down slightly, but its 7-day gain still stands at over 10%. The capital flows into AI compute hardware haven't cooled off. Bitcoin and Ethereum moved up together, and risk assets are broadly firm. The small dips in Tesla and the Nasdaq ETF look like normal consolidation after a strong run, nothing to overthink. One thing I need to flag here. Several semiconductor names, SITM, CACI, DIOD, and MTSI, have all surged more than 20% over 5 days in some cases. But we could not find any independent, verifiable catalyst behind those moves. That kind of unexplained spike deserves caution, so we are not treating it as a main theme today. Now let's look at the macro picture. The 10-year Treasury yield is at 4.62%, down about 2.7% over the past 7 sessions. That steady decline in yields points to looser liquidity conditions at the margin, which directly supports growth stock valuations. The VIX is at 15.32, still in the lower half of the normal 15 to 25 range. No signs of panic in the options market. The dollar index has broken below the 100 handle and keeps sliding, last seen at 99.48. A weaker dollar is systematically positive for emerging market assets. WTI crude is at $76.68, down 2%, and that continued pullback in oil takes pressure off inflation and gives central banks room to stay accommodative. Spot gold is at $4,409 an ounce, up 7% over the past week. The weaker dollar and falling rate expectations are the core drivers behind that rally. So let's summarize the macro picture. U.S. equity futures are up, Treasury yields are falling, the dollar is weak, and the VIX is low. All 4 signals are pointing in the same direction, risk on. 2 conditions would invalidate that view. If the VIX breaks above 20, or if the 10-year yield climbs back above 4.75%, then the risk-on logic weakens and we need to shift to defense. Now let's turn to the external environment for Chinese assets. Onshore dollar yuan is at 6.7349, offshore at 6.7414. The yuan continues its appreciating trend, up about 0.2% over the past week. A dollar index below 100 combined with a stronger yuan is a powerful signal for foreign capital inflows into Chinese assets. Historically, weak dollar cycles have seen significantly higher odds of northbound flows. On the trade and tech restriction front, there are no verified new policy events as of this morning. We are in a quiet period on external frictions, so marginal disruption is limited. For today's A-share open, we expect a higher start with high probability. 3 reasons. First, U.S. futures are broadly higher in pre-market trading, led by Nasdaq futures, so external sentiment is warm. Second, the stronger yuan and weaker dollar provide solid momentum for foreign inflows. Third, yesterday's tape was healthy, with the Shanghai index up 1% to 3940, the Shenzhen component up 1.42%, and the Chinex up 1.35%. The upside momentum is intact. But here's the invalidation condition. If offshore yuan quickly depreciates and breaks below 6.76, or if Nasdaq futures turn negative, then the higher open expectation fails. On sector direction, first watch power equipment. AI data centers need physical infrastructure, and power is the prerequisite. Demand visibility is high, and the sector has been relatively moderate in its gains so far, leaving room for catch-up. Second, semiconductor materials and equipment. Nvidia's 10% 7-day gain validates the AI capex upcycle, and domestic semiconductor material and equipment names benefit from both import substitution and global capacity expansion. These are directions backed by real data. On risk, avoid high-flying AI concept stocks showing volume divergence, and avoid small-cap names that are purely theme-driven. The Shenzhen component is up 5.39% over 7 days, and gains are concentrated in a few sectors. If futures take a midday dive or turnover shrinks noticeably versus yesterday, high-position stocks could correct quickly. Chasing at these levels is not advisable. On northbound flows, net inflows are more likely today. The dollar index at 99.48 is at a stage low, and the yuan's appreciating trend is clear. The combination of a weak dollar and a stronger yuan has historically corresponded to foreign net buying. Watch the first 30 minutes after the open. If northbound flows turn to net outflows exceeding 3 billion yuan, that signals a divergence between currency and fund flows, and we would need to revise the foreign capital view. Let me give you the core judgment for today. Weak dollar, low VIX, falling treasury yields, the risk-on window remains open. A-shares likely open higher and trade with a firm bias. Power equipment and semiconductor materials are the favored sectors. Our probability assessment for today, 40% up, 40% sideways, 20% down. That's all for this morning's briefing. See you at the close.